A quick question. Let's say if I were to borrow money from you, okay, I were to borrow money from you. Hey, how many of y'all will lend me money if I ask you to lend me money? Okay, so if I were to borrow money from you, everyone, I want you to type in the chat, right? What is the yearly return that you would expect me to, or yearly interest that you would expect me to give you? Say I'm going to borrow from you like $100,000. Okay, type in the chat. What's the annual return you would expect? Okay, interest for lending me this money. All right. Okay, so everyone do type it in. Okay, what's the amount? So clearly, there are some of you who really trust me, and there are some of you who absolutely do not trust me. Okay, so Aaron put 40%. Wow, Aaron, that's not a Ponzi scheme. Okay, that's not lending money. Right? That's Ponzi scheme. Okay. So 10%. I see a lot of 10%, 8%. Some people 20. Right. Some people 5. So what's the lowest? I think the lowest I've seen is 4. Right. I think the lowest I've seen is from Colin, who wrote 4. Right. But guess what? In Singapore, every Singaporeans are lending money every single day for just 2.5%. Do you get what I'm saying? I hope you guys get the moral of the story already, right? Singaporeans are lending money for 2.5%, and they do it every month without fail, so long they are working. Okay, and this scheme is actually the CPF scheme. Now, I'm not here to bash the CPF scheme or anything, right? But I'm just sharing that this is the return, this is the interest that you're getting by parking the money in your CPF account every single month. Okay, so I will start tonight's session with firstly the CPF scheme first, right? I want to give you guys a quick run through in case for those of you who are not aware of the CPF scheme. Okay, Hui Ping is asking me, am I trying to model Charlie Munger? What do you mean? What model after which part of Charlie Munger? Definitely his grand old age, definitely that's something that I want to model. Okay, so for CPF scheme, hey guys, how many of y'all here are CPF contributors? If you are, type in CPF. Or how many are retiree? Retiree type retired. Or type free, you're free already. Okay. So basically, the CPF is a scheme that almost everyone in Singapore, right, be it whether you are citizens or PR, right, that you have to set some funds aside for retirement. Okay, and this is primarily used for healthcare, right? We have MediSave, home ownership, which later on we'll talk about, right? And there's also some asset enhancement. Now, how much in return do you get for CPF? For the ordinary account, or we call it OA, right, from here onwards, the return is 2.5%. Okay, 2.5%, right? And then there's the special account, right, which is 4%. So just now, all of you who say that you will lend me some money, right, you guys asked for way higher than what the CPF is giving, right? So my question is then why do so many people still not invest their CPF? Okay, right? Because to be very honest, I'm not saying that this is a conspiracy or whatever, right? But I do not think a 2.5% is going to help you for retirement planning, to be very honest, right? It is not going to be like that, okay? So I'll share with you tonight how I use CPF, what are the instruments I do, and how I try to do my best to maximize it, okay? So that I'm pretty confident I will see a $1 million CPF at the end of the day. Okay, all right. I'm just telling all of you, I am very confident based on my trajectory, I will hit a $1 million CPF by the time I need to take it out. All right. And the truth is, I think most of you can achieve the same as well. Okay. I believe most of you can achieve the same as well. So for those of you who are CPF contributors, right, would you like to go for 1 million together with me? If you like to, let's do this together. All right. Type in 1M. Okay. Type in 1M. Let's go. All right. So Eric's asking what's the base? There is no base. But of course, if you're going to retire tomorrow, then your base should be quite higher. Okay. So it depends on how young or how old you are. Okay. All right. So let's dive straight into it. So the first thing is you all need to understand, right, that the best time to supercharge your CPF is when you're younger. Okay. This is the first thing that a lot of people kind of forgot about it, right? So when you're less than 55, right, your CPF contribution is actually the highest at 37%. And 20% is from you, and 17% is from the employer. Okay, so this is fantastic. So the moral of story for this picture is start as early as you can, right? Start investing your CPF OA as soon as possible. Now, just now I talk about various schemes, right? So there is the ordinary scheme, there's a special scheme, and a MediSave and retirement scheme. Now, I just want to exclude certain account from this discussion first, right? The first one is this. MediSave will exclude. Why? Because it is very useful for your insurance payments. Okay, for those of you who bought insurance, you will know that a lot of times it can be paid by MediSave, right? And MediSave gives you a very solid 4%, right? So this one, we won't really touch tonight's discussion. We will not invest it. Anyway, you can't actually use to invest it, okay? And secondly, we will also not talk about the retirement account because you also can't invest your retirement account. So tonight, we'll just focus on the ordinary account and the special account. And as for SRS, which is a separate scheme, a lot of people got confused. Whenever I talk about SRS, they thought that I was referring to the special account, which is more commonly known as SA. Okay, so SRS will be later on, right? So tonight we'll just focus on ordinary, special. Then at the end, I will talk about SRS for those of you who are on SRS. Okay. Now, as a criteria to start investing your CPF. Now, do you even know that there are criteria to start investing your CPF? Okay. So these are the 4 criteria. Only these 4. Firstly, you must be of 18 years of age. Secondly, you cannot be a bankrupt. Okay. And thirdly, your first 20K in your CPF OA cannot be invested. It has to remain. But there's a get around to do it later. There's a get around to do it later. Okay. Your SA, your first 40,000 in your SA is also not investable. All right. So for those of you who are just starting to work, then the best thing you want to do is to work towards more than $20,000 in your OA to start investing. Okay, to start investing. Now, let me go on to. Give me a second. Give me a second. I realize there's something wrong with my slide. Give me a second. Okay. Very fast, very fast. Give me a second. Where is it? Okay. Okay, so I need this to fly in, and this has to be here. Okay, can. All right. So let's go back to the slides. Okay. By the way, guys, any questions? Just type it in the chat. Okay, just type it in the chat. Where's my slides? Okay, very good. Over here. All right. Okay. So this is the CPF scheme, right, for both OA and SA. So many of you here would be using your OA to invest in shares, right? However, there is a limitation. You can only use up to 35% of your OA to invest in shares, or after you have achieved the first 20K. So I'll give you an example. So let's say you have already 20K already. Okay, so this cannot be invested, right? Whatever is remaining, you can only invest 35% of it, right, in your shares. Okay, and later on I'll tell you which are the shares that you can buy. Okay, not any shares out there. Okay, right? So up to 35%. Now you can also invest your CPF OA in like property fund, bond, corporate bonds. Okay, up to 35%. You can invest in gold as well, right? For those of you who are in the market, you know that gold prices has been soaring. Okay, but only up to 10%. However, there are a few that you can invest 100%. That means after you hit 20K, all can be used, right? So specifically are the actual ETF, right? These 5 ETF in Singapore. You can go to the website later. I'll give it to you, right? Which are the 5? But this is just a Singapore ETF. Basically, your STI ETF and also your gold ETF, right? So 4 standard ETF and 1 gold ETF. Or you can buy them all in government bonds, right? But I can tell you this is quite a stupid idea. Why? Because the government bonds now are paying less than, okay, they are paying less than your standard 2.5%. So it doesn't make sense to buy the government bonds at this moment, okay? Another one is unit trust. Now, unit trust and investment linked policy, they are very similar. Unit trust is just a standalone. Investment linked policy is generally investment tied together with a unit trust or a few unit trusts, right? And you can invest 100% of it. Now, I'm not saying this is also why there are so many people selling this, but I suspect this might be a reason, right? Why people, especially out there, some of the financial advisors, they're selling a lot of these unit trusts to people to use CPF OA because they know that you can use 100% of it to buy unit trusts, right? So for those of you who have been following me in OMI or even in my own channel, you know that I'm generally not in favor of unit trust simply because the fees are way too high. Okay, way too high. Sometimes 3%, sometimes 4%, right? And in terms of insurance, right, this is a form of insurance. I do not like to buy insurance that is tied to anything. I like to buy insurance, pure insurance, standalone insurance. Investment is investment, insurance is insurance. So I don't have to tie them together. Okay, so generally these are not what I like to do. Okay, so CPF OA, this is what you can invest in. Now, question, right? So Qing Hao is asking a great question. It's like, this 35%, is it that I can invest in 35% shares, then 35% property fund? No. Sorry, it's together 35%. Quah, quah, quah. Okay, so you can't really invest a lot, right? Using that. Okay, now let's come to special account. For special account, basically, I do not like to use them for investment simply because there's so many things that you cannot buy. Everything, almost everything you cannot buy. The only thing you can buy is some kind of unit trust and some kind of investment policy, which is already something that I don't like to begin with. Okay, right? I have not seen a unit trust that I really, really like it as opposed to if I had a choice. Okay, so I would say personally for me, what I do is this. I do not invest my special account. I do not. Okay, I do not invest my special account. I just keep it there because at least the special account gives me 4% return risk-free. Okay, risk-free. Risk-free 4%, I think that's pretty good still. All right. Till the day that our interest rate goes up like crazy, then maybe it's better to use your money to, I don't know, buy the US treasuries. But at this moment, risk-free 4% is still a really solid deal. Okay, it is still a solid deal. So for those of you, and especially Hui Ping, who is thinking about, and Hazel, right, thinking about the special account a lot, my own advice to myself is I don't invest them, right? Because it is just too hard to invest them into something that is really good. So I just go for the 4%. Okay, right? So I don't really invest them. All right, keep it there. Now, the next one I want to share with you guys is there are a few things that in terms of CPF OA that I will invest in is shares, okay, and gold-related product. But as you can see, it is a very small portion, right? It's a very small portion. Why? Because there are a lot of limitations. First and foremost, right? In the shares category, you can only invest in Singapore stocks. You cannot invest in US stocks. You cannot invest in Hong Kong stocks, China stocks. No, right? None of that. It's just Singapore. And only the ETFs that are approved, which are the 5 Singapore ETF, right? So one common way that I personally do back in the days, right, is that I invest in banks, right? The UOB, OCBC, and DBS, right? Because I know that even if the share price of these companies don't move, the dividend return is higher than 2.5%. Okay, and these are pretty solid, gold standard Singapore investment. Right? I can't think of anything that is more stable in Singapore than these few banks already. Okay, right? That is big, government backed in some ways, and it's very stable. And the other one is I don't need anyone to back it up, right? Which is a gold ETF. Okay, all right, is a gold ETF. You can buy it from the Singapore. It's one of the 5. Okay, it's one of the 5 here, right? You can go and basically, if you go to this link over here, right, you can find a full list of stocks that you can look at to invest, right, in Singapore, which includes all the ETF, right? So in terms of OA, this is one way to invest, but really it is still not the very best. Okay, it is still not the very best. Now, the other one that I recently saw more people doing it, and I think it's not a bad idea, is this, right? Is the robo-advisory. And in particular, Endowers is the only robo-advisory that allows the use of CPF OA to invest for you. Okay, so what they can do is they can actually invest for you in the broad market index. For example, the US S&P 500, the China index, or even the tech index as well. Okay, so for those of you who want to go and open the endowers account, this is my link over here. All right, if you open it, both me and you, I think we get like $20 off our trading fee or something like that. Okay, so it's not going to make me very rich, but okay, but if it can benefit you, can benefit me, why not? Let's do this together. Okay, and why I suggest this robo-advisory is because there's no one else. There is no one else in Singapore that can invest CPF OA. It's the only robo-advisory. Okay, and if you are going to use endowers, my suggestion to myself is that I will only pick the standard ETF. Okay, to give you guys a very open look, is that endowers actually uses unit trusts to invest. But what they do is this, which is very brilliant in my mind, right? Is that they know that CPF OA cannot invest outside of the Singapore stocks. So it naturally excludes the US ETF. But what they did is this, right? They have found the unit trust, or they even created the unit trust, I don't know, right? Whichever, to invest in those ETF. For example, you can buy a unit trust that's called the Lion Global Infinity 500, something like that. Okay, and the number 500 comes from where? Comes from the S&P 500. So while you cannot invest in the S&P 500 ETF directly, you can use endowers to invest in the unit trust that invest in the S&P 500. Okay, so this they are get around doing it. Okay, and because of this, you're not restricted by the 35%. Aha, dun dun dun. Okay, you can invest 100% of your CPF OA after the first 20K, right? Using endowers into this unit trust. Okay, so one thing I want to suggest to everyone when you look at the unit trust endowers is there are about 8 to 9 unit trusts. I can't remember exactly, right? And I think there's a S&P 500 one, there's a China one, there's like some emerging market one. I would suggest most of you just ask yourself, do you understand what is the ETF behind the unit trust first? Okay, right? So do you understand it? The second one is look at the expense, right? How much do they charge you? Of course, it will not be as cheap as you directly investing into the ETF. Okay, but for example, the Lion Global Infinity 500, I think the expense ratio is like 0.4, which is still not too bad. Okay, which is still not too bad. But to give you a perspective, the one in US, the SPY, S&P 500 ETF, can anyone make a guess? The original S&P 500, what is the expense ratio? Anyone knows? Anyone knows? If you don't know, make a guess. Anyone knows? Type in the chat. Type in the chat. Okay, I'll go and show you just to tell you that it is not me cocking up weird things for you. Okay, all right. What is the expense ratio? Some of you are at 0.05, 0.07. So I know who are the S&P 500 investors here. Okay, all right. And the answer is 0.09. Okay, 0.09%. Whereas the Lion Global one is 0.4%. So it's in the magnitude of like 10 times, almost, maybe 5 times. Okay, but frankly, I think that is still not too bad. That is still okay. All right, although it's not as cheap. Okay, so that is really one of the best way you can invest using your CPF if you really want to buy US shares. Okay, in this case, you cannot buy the shares directly. You can only buy the unit trust that holds the ETF, right? And they even like give you a very nice graph. They tell you, okay, if you put in 50K, right? You put in 50K and you let it grow and grow for 30 years. Wow, not bad. It can hit 287K, right? So what does this boils down to? This is a growth rate of how long? It's about a 6% growth rate. Okay, and that is generally the average growth about for the US stock market if you buy the market. Okay, 6%, which is not too bad, right? Which is not too bad. Hey, how many of you are happy with 6%? Okay, so here I take a poll again. If you're happy with 6%, you type in happy. If you're not happy, you type in sad. Okay, if you're happy, type in happy. If you're not happy, type in sad. Okay. Hey, there's no half one in life. Okay, so here I detract a bit. Guys, I can tell you in life, right? It sucks to be in the middle. Okay, it sucks to be in the middle. Why? You should either be happy or sad. Why? Because if you're happy, you're contented, then fine. You have nothing to complain. If you're sad, you're not contented, then what should you do? You should do something about it. Right? You should go and do something about it. But what's the even worse position to be in than sad? Is you're in the middle. You're neither happy or neither sad. So you are not achieving your goal and you're not taking action. That sucks. Okay. All right. That sucks. All right. So guys, the good thing is this. Okay. So like Clara said, yes, neither here nor there. In life, right, guys, don't be neither here nor there. If you want in life, be as successful as you can or be as lousy as you can. And I mean it. Okay. It's either you put in no effort, right? And you just don't give a care already, or you put in 100% to make your life better. Okay. And this is the mindset that changes so many people's life, including myself. The moment I decided I don't want to be in the middle anymore. Okay. So I hope that if you don't want to be in the middle, please don't go below. Hope. I hope. Okay. But really, if you're going to be in the middle, you might as well don't do it. Okay. I know this is very controversial, but really think about it. Okay. Think about it. Now, but is there a way to do better than 6%? And you still can use 100% of your CPF OA. You don't even need to keep the 20,000 aside. Possible or not? Possible or not? Possible or not? Okay. All right. No, not SRS. Not yet. I'm still talking about CPF OA. There's a better way to use CPF OA where you do not need to set aside the 20K. You can use it all the way if you want to, right? And beyond the 20K, whatever amount you have left, you can use all of it, right? You can use every single bits of it. Who knows the answer? Type it in the chat, okay? Who knows the answer? Type it in the chat. Okay? So Ryan is asking about iFast. Later I'll share with you the if you are using iFast, what are the challenges there, okay? Don't know. Hui Ping don't know. Anthony says property. Winston says ETF. No, ETF cannot. ETF, you're restricted by 35%. Okay? And the answer is property. Indeed, the answer is property. You know why? Because the earlier part, right? Even if I use endowers, or even if let's say I use iFast and I manage to invest in a better way, which I don't think is a better way. Later I'll share why. Okay? The truth is I'm only using 35% of my CPF to generate this 6%. What about the rest of the 65%? What is it doing? What is it doing? Type in the chat. It's just sitting in my CPF, not doing anything. Okay? It is just sitting in my CPF, not doing anything. So to me, property seems to be a better way. Why? Because on average, property is like this. Okay? There are up years and down years, but the average is about maybe 4 to 5% return a year. Okay? 4 to 5% return a year. While it's not as good as the stock market at 6 to 7%, but I can use all of them. You see the difference or not? So guys, let me ask you, would you rather invest just 35%? So would you rather option A? Okay, option A, right down here. Option A, you invest 35% to get 6%. Or would you rather option B, you can invest 100%. You don't even need to set aside the 20K, to get maybe 5% or even 4%. Which one would you prefer, A or B? Everybody type in the chat. I want to see whether you all understand what I'm trying to tell you all here. Because this is not very intuitive to a lot of people. And that's why I still see people use their CPF OA, go and buy stocks. Then I say, can but it's very restricted. Whereas property, there's no restriction. Just buy any damn property you want. Okay? Fred said, can we split half-half? If after you split half-half, you still can buy one property, I think it's not a bad idea. But I can tell you, most people will not be able to do it. Right? Splitting half-half is just not possible. Kok An is asking ABSD. No, we're not talking about ABSD here. We're just talking about one property only. Okay? So guys, A or B, type in the chat. Type in the chat. Hey, there's 200 of you. 300 already. Sorry. Hey, if you are not responding, then we can end the session here. No fun already. Okay? Hey guys, tell you a trick. Whenever you go for any event, right? Be the person that sit in front and talk to the person, the speaker. You know why? The more you talk, right? The more he is getting energy from you, the more he will share. He will share beyond his scope. Okay? I'm not asking you all to do the same thing tonight. right? But that's the trick of the trade. Okay. So let me share with you a real life case study why property investing, right? Although I say on average 4-5%, but the real life case study is very, very different. Okay, real life is very different. So I'll give a case study. Right. So this is a property in the Fernview area, Fernview Road. Not the most prestigious part of Singapore by any imagination. Okay. 23 Fernview Road. This is a private property. Can anyone make a guess? What development is this? Okay. Da is asking about the CPF interest. Don't worry, later I'll touch on the CPF interest. Don't worry, okay? The interest is a consideration, but later I'll touch on it. So Kok An got it, right? It's High Park Residences. Exactly. Okay. Oh, wait, where did my screen go? Oh, yo. Okay, here. All right. High Park Residences. Can you all still see my screen? If you can still see my screen, type in yes. Yes. Okay. So this is High Park Residences. Not near the MRT, not near like prestigious school. It's just near the Jalan Kayu stretch that you can eat prata. Okay. So this is a unit I personally know. Okay, so Kok An very nice. You want to say, oh, Pete, don't be so bad. It is at least beside the LRT. LRT is not really MRT. LRT is just LRT. Okay, right? Okay, anyway, this family bought this property back in 2016, January. All right, this is the actual transaction. 20th floor, okay, 20th floor. 1152 square feet, 3-bedder. Okay. About 1 million, about 1.1. Right? So today, recently, I think back in December, there were a few transactions. Okay. Guys, can you make a guess? How much is High Park Residences going for back in December 2021? December. I'm not even saying now, no. I'm not saying now. I'm saying December. And one of the reasons why is because this size, right, is very rare in High Park Residences. This size is very rare. That's why the last transacted was actually in December. That's why I could only show you the comparison in December. Okay, make a guess. For those of you in property one, you should roughly get it quite well. So give you some time. Everybody make a guess. So Tin Chin says, hey, if I got your name wrong, please forgive me. Okay. Joshua says 2 mil. Kok An says 1.5. Tin Chin says 2 mil. Sun take 1.8. Clara says 1.3, 2 mil. Ian says 2.5, 2 mil. Wow, guys, 2.5 mil. Hey, you all are going to pay so much for High Park Residences. Okay, anyway. Okay, so the drum roll. Dum, 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 dum. The answer is this. Okay, these are all very similar units. Slightly lower floor. Bear in mind, this is 20th floor. There's 13, 10, and 14. So December, 13th floor sold for 1.57. Okay, maybe we backtrack. August last year, it was first sold for 1.4. Then by December, the lower floor one started to sell at 1.56. Then at the same month, 13th floor sold for another 10K more. Okay, so if they were to sell today, guys, can you all make a guess? Based on what you see now, okay, so I want to test you all as investors, okay? Based on the last transacted price, if I were to go to the market and sell now, what is a reasonable price this family will get? What do you think? What do you think? Type in the chat. Some people say the 14th floor is undervalued. True, maybe. Yeah, that's true. Johan is saying that. Yeah. So takes 1.8, 1.8, 1.6, 1.6, so a lot 1.6, 2 mil, right? TR is saying 2 mil, Ginny is saying 2 mil, Tim Chin is saying 1.7. So guys, the thing is this, even if I go to the market, right, and go for 1.6, okay, 1.6 mil, what do you think is my return? I'm putting the lower end of whatever you all just said. The lowest end. Some of you all say 1.8, 1.9, 2 mil. Okay, so let's calculate. Okay, because I'm a very numbers person, right? So out there are people talking about making money, but they don't give you the numbers. So guys, trust but verify. Okay, always ask yourself, does it make sense or not? Does it make sense for me to use my CPF OA to buy property, or should I leave it in there because there's opportunity cost involved? Okay, so let's take a look. Right, so firstly, the absolute profit is $504,000. But okay, guys, so this one must take note. There are other costs involved. First and foremost, there is the buyer stamp duty. Okay. And then you also have to factor in your interest paid, your MCST, your property tax. Okay. So all these will add up to about 28K plus another 104K, right? Okay. So it will add up to about a net profit of 371. Okay. So it's not exactly 504 because you have to factor in this. Right? Factor in this. Now, some people argue with me and say, hey, Pete, you cannot count MCST. Why? Because when the family stays there, they use the facility, right? So they by right should just pay for the facility. So you cannot count that, but let's just be stricter. Okay, let's just be stricter. Okay. So net profit 371. Now, how many percent return is that? How many percent return is that? Here is where I test your property knowledge. What is the ROI, the return on investment? So ask yourself, how much money did the family put in the first place to generate a 371% profit? Okay, all right. Now, guys, let me ask you, if you are buying a property, there is 1.96 million. How much down payment do you need? Do you pay the whole thing or do you pay just down payment? What do you think? Okay, how much down payment do you need roughly? Okay, roughly how many percent? Yes, 25%. Hey, no, Ellie, there's no 10% down payment, Ellie. 25% down payment, right? Plus a bit of 25% down payment plus a bit more if you cannot loan. Okay, so minimally is 25%. Minimally. So let's go back to here. So we know that the net profit is this. But out of the 1 million, actually they are down, okay? Their down payment is only 274,000. So the true return, the return on investment, not return on property price, the return on their actual investment, which is what they put in, is 135%. So they stayed there for how many years? They stayed there for about 6 years. So if you just divide by 6, your annualized return is a whopping 22.6%. I just want to let that set in for a while, right? 22.6%. Now, Kok-An can say that Hyde Park is a rare case, and Kok-An, I don't mean any disrespect. I can tell you, every day I hear people tell me property, one-off case, one-off case. Hey guys, I can quote you another 10 more cases. But the thing is this, if you're not convinced, you're not convinced, right? Okay. So 22.6%, is that good or not? Okay, is that good or not? Now, do you have to make monthly payment during the 6 years? Of course. But guys, think about it. They make 22.6% while staying in the house. While staying in the house. Can you stay in your S&P 500? You can't, right? Okay, you can't, all right? Okay, so the question is it a one-off case? I would say in the Hyde Park area, it's not. It's really not, right? Look at all this. In fact, I would say my dear friend is maybe in the middle. Okay, it's maybe in the middle. And why I say real estate is such a powerful tool is because you can use 100% of it to make a down payment, and you can invest in a very safe and stable asset known as the real estate using leverage, because you don't have to make the full payment. You just make the down payment of 25%. That's why it's so powerful. Okay. Now, the truth is, I think the 22.6%, right, is just a number. There are a lot of other intangible benefits. For example, you kind of got paid when you are staying in the place, right? And the family, like I said before, I deduct away for their MCST. That means they literally got paid to have a swimming pool, to use the gym, and at least have a car park. Okay? And your investment is a house. It's not the stock market. So you can sleep soundly. How many of you all tonight is going to stay up to look at the US stock market? For those of you who are invested, I think 90% of you are going to do that. But for property, I don't need to look at my property price every single day. And fourth is a very sound form of leverage because you are borrowing at the lowest rate possible in the market. Hey, do you know that property loan interest rate is the lowest in the market? You know? If you go to the market and borrow yourself, you're paying maybe 6-7%. But property, even with the rate hike now, is barely hitting 2%. Okay? And last but not least, different types of property. This property, as they gain 500K, technically, right? I was just telling them, right? So I did consult with them. I said, technically, guys, you all don't need to sell the property to make the money. Okay? You don't need to sell the property to make money. You can actually extract the property out using another instrument, a term loan instrument. Okay? But I must caveat, this is not possible for HDB. Right? It's not possible for HDB. Okay? So to answer Helen's question, if you already have HDB, if you're thinking about buying a private property, you need to pay ABSD, should you do it? The answer is, I think you shouldn't. But if your return is this amount, does 17% make sense to you? Right? And like what Yawen say, yes, you can go and sell your HDB, right? Okay? Yeah. Yawen is 过来人, so he knows. Right? So I'm not saying that you should go and pay ABSD. Of course, another option is you can sell your HDB. But frankly, to me, if you can find a damn good property, right? Actually, sometimes the 70% may make a bit of sense. Okay, I'm just sharing my thoughts out there. Okay, so some quick strategies, and I think that's how some of you asked me the questions. Okay, first one, should you transfer your OA to SA? The question is a very good question, but it's a hard to answer question. So my method is this. Only do it, you only transfer your OA to your SA if you want the higher 4%. If you are very certain you do not need your OA to buy a house. Okay, I say this again. You only do it if you're very certain you don't need the OA to buy the house. Second one, should you invest your SA? I will not say whether you should, but Pete does not do it. Okay, because 4% risk-free to me is very cool. And anyway, SA you can't invest in very good instruments also. Now, should you invest your OA? I already said before, if it's for property, to me I think it's a great idea. But if you're investing in the stock market, be very careful. Now, for those of you who are investing in the stock market and you understand the stock market, like you know how to do it, like my students in OMI or OMM, then I'll say, yes, please go ahead. Like it's fine, right? Go ahead and invest because you know what you're doing. I think you can get a long-term return of more than 2.5%. But there are out there a lot of people investing in the stock market that do not make money. Okay, in fact, the last 3 years, CPF board actually have a statistics. The majority of the people who use the CPF OA and invest in the stock market do not make money. I say this again. The majority of the people who use their CPF OA to buy the stock market, they do not beat the 2.5%. But I can tell you, property, right? I'm pretty certain they never publish the number. You know why? Because the percentage of people making money will be super high. Right? I don't know the number, but my guess, if I were to hazard a guess, it will be in excess of 80%. In excess of 80%. Why? Because Singapore property in general, most transaction, 80% above makes money. Okay, so I'm just extrapolating that stats. Okay, so for me is OA. My first choice, I will look at property first. If I invest in property already, I still have remainder. Then I will go and invest, maybe using endowers or whatnot, buy the index if I don't know what I'm doing. Okay. Johan is saying because they never attend OMI. Yeah, guys, you all should attend OMI. Okay. All right. Come for the next one. In May. What's the date? Let me see. Yeah, I'm feeling very chill today. So pardon me if I'm like very relaxed. Okay. Not very formal. The next OMI is on the 6th to 8th May. 6th to 8th May. Okay. All right. So this is for CPF OA. That's it already. Dun, dun, dun. That's it already. Okay. Helen is saying I agree with your OA strategy. Oh, thank you. Okay, but guys, please do your own due diligence. Okay, do not just like this is not investment advice. Okay. Okay. Now, okay, I want to answer one question. Just now, I think somebody asked like property. You use CPF. There's interest, right? Okay. So very simple. Let me share with you. Let's say you invest in the first house. Okay. And then when you sell that time, right, you need to return to CPF, correct? So you need to return the value plus the CPF 2.5% accrued along the way. So for example, my family before that, that family before that, 6 years of CPF accrued interest. Okay. However, guess what? After you sell your house, what are you going to do? Stay on the streets. What are you going to do? Guys, what do you do after you sell your house? What do? You buy another one. Correct or not? So if you're going to buy another house, then guess what? Guys, where does the accrued interest go to? Where does the accrued interest go to? The accrued interest mainly go into CPF for like 2 days. then go into the next house, right? So it's still your money. Right, it's still your money. Yes, like what you would say, you go into the new house. Okay, it is still your money. Right, no problem. Okay, this strategy doesn't work so well for second private property. Yes, if you're buying a second private property, the only problem is you need to pay 17%. But like I just said, if you look at the numbers that I showed you earlier on, is it worth it to pay 17%? You think for yourself. Okay, you think for yourself, okay. Hey, but I must say, not every property out there can buy one. Not every. That's why I still have my consultation to teach people how to do it. Okay, not every property can buy. Not every property will make this kind of money. I agree, got on, right? Hyde Park is one of the few cases, one of the cases that make money. It's not few, but it's one of the cases. So it's like 80%. I'm showing you the 80%. But does it mean that there is no 20%? No, that 20% still exists. So do not anyhow buy. If you anyhow buy, you hit the 20%, you'll be in like a ton of pain. Okay, you'll be a ton of pain. Okay. Questions keep to later on. I want to jump to the SRS part already. Okay, because this one is also quite exciting. All right, so CPF OA. Later your questions. Let me know again. Okay. Koan just sold Hyde Park 1 month ago. Nice. I mean your own or your agent? Okay. All right. Okay. So the next one we go into SRS. Why? Because a lot of times people say this, in life there are two things you cannot avoid: death and taxes. Okay, so is that true? Right? Is that true? Now, there is a way, okay? There is a way to pay less tax. Okay, and to me, pay less tax is like making profit already, because it is the money that you can keep. Okay, it is the money that you can keep, which is why a lot of the biggest corporations out there, the wealthiest people that I know, they go all out to reduce their taxes in the best way possible. Okay, in the best way possible, right? So, wow, Glenn is asking how to choose the right property. Wow, that's a very good question, but a very long answer. Okay, wow. Okay, let me think. Okay, I think we still have slots. I'll do a slot. Okay. So here I do a plug. So I hope you all don't mind. Okay. I still have some slots for property coaching. Okay, so those of you who want, you can go to the link. Okay. Oh, the link doesn't work like that. Okay, let me type. Still cannot. Never mind. Okay, you just copy and paste. You know what to do. Okay. All right. So this is the link for the application. For those of you who want to know more, can ask Yawen. No, just kidding. I'll see like that. Let me try. Anyway, okay. Can I'll do like that. Let me try. Cannot. Okay. So you all know this is the link. You all can type it out yourself. bit.ly/property repeat. Okay. So let me go into SRS. Right. Let me go to SRS. So for SRS, why I love it is because it is one of the best way to reduce your taxes. Okay. So for example, in this case, right, for this person, without contributing his SRS, right, after he minus away all the personal tax relief, and I can tell you, for guys, we have very little tax relief. The girls have a lot, right? You have one kid, your tax relief is like, woohoo, it's like insane, right? Okay. Now, then the rest of your annual income, you have to pay tax for it. So it depends on how much your tax is. And recently, the government just increased the top tier tax for the very high income guys, right? Those with like, I think 400K to 500K per year kind of income. Okay. But if you have SRS, you can actually reduce your taxable income by this much. So this amount that you contribute into your SRS will not be taxable. Okay. But you cannot take it out before your retirement. So that's age 62. As of now, 62. However, it is not all bad news because you can still invest that amount of money. Okay. So it reduces your total income tax while allowing you to invest for retirement. Okay, so how much can you put into your SRS every single year? Now, if there's no limit, I can tell you there will be people who like go crazy and max it out. Okay, but there's a limit. Currently, the limit is 15,300 for Singaporeans and PR. If you are a foreigner, the government say please contribute more. The limit is 35,700. So basically, like more than double. Okay, more than double. So if you're a foreigner and you're a high income earner, this is one of the tricks that you can employ. So basically, this amount will be deducted from your annual income and you don't have to pay tax for it. Okay, so later I'll share with you roughly how much impact there will be. Okay, but the first thing is this: what's the usage of SRS? Okay, what's the usage of SRS? Firstly, it is way more flexible than CPF. Okay, you can buy a lot of things. You can use all of it, right? You can buy ETF and whatever, so long it is like available to you to buy in the brokerage. Okay. Now, if you do not invest your SRS, your supplementary retirement account, they only give you 0.05% return if you don't invest it. So please invest it. Okay. Now, how do you contribute to SRS? Very simple. Go to any of the major bank, either let me write down here, DBS, OCBC. I think only these three, if I'm not wrong, right? Or UOB. Okay, right? And just open an SRS account. Now, you just need to top up your SRS account on or before or earlier than 31st December of that year. So for example, those of you who just filed taxes, I don't know if you all just did, I just did my taxes earlier this month. If you want your deduction for the next year, you must top up by the end of this year. So for 2022, okay, 31st 2022, it will be for your tax filing for 2020, next year 2023. Okay, then you will qualify for it. Now, let's take a look at what's the impact if you were to, how much you will get to profit from it. Okay, if you were to throw into your SRS. Okay, Alvin says he top up his RA as well. Exactly. Okay, but I generally do not do that. Why? Because I cannot really use my RA to invest. I mean, I get a 4%, but I don't really get to invest my RA. So I prefer SRS in this case. Okay, and I can do more. RA has a limit. I think it's like 7K. This year it's like 8K only. But SRS, I one shot, I can do 15K. Okay, but you can do both. Okay, you can do both. Okay, so if your annual income is about 120K, so let's say you earn about 10K a month, right? Your original tax will be about close to 8K. But after you top up SRS, the tax that you pay would have helped you to save $1,700. So how I look at this is very simple. I don't have to pay this amount in tax already, but I threw in 15,300 into my SRS. So what is my ROI? Okay, for those of you who attend OMI, you know that I kept emphasizing on this term. Always ask yourself, what is the return I'm getting? Okay. All right, guys, can you type in ROI? Focus on this. Whatever you do, OA, SRS, special account, property, stock investment, join OMI or OMM or other things, ask yourself, what is the ROI? Calculate it first. Okay, so I took this amount and I divided it by 15,003. If my income is about 120,000 a year, my ROI is 11% already. That means even if I do not invest this $15,000, my first year return is 11% already. Wow. Okay. Now, if your income is about 160K, then your profit is even higher, is 2,293. Your ROI now is a whopping 15%. Okay. But for those of you who are more senior, you're older, like me. Okay. So I always say, young chap, the good thing is this. While you all have lower income, but you all have age on your side. But for us, we traded our age for income. Okay, so those of you who higher income, but you're a bit older and a bit more adorable already, like me. Okay, your tax deductible get higher, close to $3,000 in deductibles. If you divide it by 15,003, 19% ROI. Okay, and really, if you are quite high income earner, right, top high bracket one, your tax deductible will be 3,000 plus, right? And your ROI is 20%. Not too bad. Okay, and this is, you haven't even invested in it, Okay, so I would say SRS is very useful, not just for the high income guys, but even for low income guys, right? Because your ROI is really good. So if you can contribute to an SRS, the moment you start working, you should not, you should not miss it, because every year you can only put in 15,000. I can tell you there are some years I ask myself, wow, can I put more or not? Okay, so do not miss the opportunity. 1 year you don't put in is 15,003 of tax savings that you don't get to do. Okay, is 1,500 and 15,500 of savings that you do not get to enjoy. Okay, so benefit once again is to reduce your taxes, and your investment return accumulated is tax-free, right? And the product you can buy is like almost unlimited. It's really like pure cash. Okay, so you can buy fixed deposit, bonds, you can buy insurance if you want, you can buy stocks and shares, index, ETF, unit trust, REITs. Okay, so guys, over here, which one will you choose? Type in the chat. Which one will you choose? Okay, unfortunately, before some of you all ask me, you cannot use your SRS to buy property. If you can, wow, that will be damn good, man. That will be like, wow, hot already. Yes, like what y'all would say, hot already, okay? Oh yeah, I go and bowl it already. I thought it's animation. Okay, wait. Okay, yeah, never mind, you're sorry. So Eric is correct. Every one of you will have your own choice, but for me, I would like stocks and shares. Okay, I would like stocks and shares because that is still the highest probability of success in investment. Why do I say that? Because you look at this graph. So I want to share with you, right? This is basically the US stock market in terms of the fluctuation in returns. Okay, the fluctuation in returns, if you hold it for different periods. For example, if you hold it for 1 month, your fluctuation can be as high as 39% profit or minus 29%. Okay, if you hold it for 1 year, your fluctuation is like, wow, sounds very good, 158%. But there are some times your pullback is as big as 66% drawdown. Okay, but once you expand to 3 years, then it becomes more stabilized, about the same, 44%, 43%. And you have a much higher win rate. Sorry, I didn't show you all these. Your win rate for per month is 63%. Your win rate for 1 year is 75%, but your win rate start to increase after 3 years, 83%. On the 5-year mark, you have the probability of 87% win rate. But guys, the holy grail is this. When you stay invested in the in the stock market for a period of time that's more than 10 years, your probability of success is almost certain. 95% already. 15 years and above is 100%. 100%. So to me, this is why I throw in SRS in the stock market, because I know that SRS is not something that I can touch right now, right? When can I take out my SRS? Everybody, type in the chat. When can I take out my SRS? It's only when I'm 62. So I know I have a very, very long time horizon. Okay? I have a very, very long time horizon. Definitely more than 20 years based on my current age. Okay? So I know that probabilities on my side. I just need to invest judiciously. Okay? Okay, I think there are some questions that my next slide will answer. Is that how do you invest your SRS? Okay, so if you use any of your Singapore brokerage, be it the banks or the standalone brokerage, okay, your Singapore shares you can buy very easy. Okay, you can also buy insurance. You can buy use robo-advisor. Once again, endow us, okay, if you want, right? But can you use your SRS to buy beyond this? So let's say you want to buy, okay, so guys, let me ask you, what do you want to use your SRS to buy on top of whatever I tell you here? Okay, what other than what I tell you here? You want to buy US stocks? Yes. What else? Anything else? What's S27? Oh, I think that's the SPY ETF, right, in Singapore. You can buy that one. Okay, you can buy that one. Angela is asking what type of insurance are we allowed to buy? I think you can buy any insurance. Right? You can buy any, I think like those endowment plans also can. Okay? You want to buy Hong Kong stocks? Okay, can. What else? That's it. Okay? All right. You can actually buy even crypto. Believe it or not. Okay? Unfortunately, Winston, WM, you going where? I'm just about to tell you the best thing. Okay, but then I go like, it's okay. Okay, so to me is this. Actually, there's way to use your SRS beyond what the standard brokerage can allow you to do. Okay, so this is where I'm going to share my own investment service. All right, and it is known as the Next Level Portfolio. Right, it's a managed account service, and we allow funding through SRS And what we can do is that we can invest in overseas shares, like such as the US or even Hong Kong. Right now, we don't have any Hong Kong, right? My allocation has 0 to Hong Kong right now. But US, you can buy Singapore, you can buy Canada, you even can buy Bitcoin and crypto. Okay. So for me is this, I like to give my clients that flexibility, right? To know that their SRS money, which is kind of locked in for long duration already, for 62 years, right? I mean, until 62. Okay. So they can have a long horizon of compounding their returns. And I can tell you, generally, right, those people who open an account with me, I prefer people who are SRS investors. You know why? Because they will not be affected by the market. Really, they are damn chill. The moment they know that they cannot take out the money, but until 62, right? All they do year in, year out is they say, hey, Pete, this year I already top up the 15,003 already, which was like in January, right? Okay, Pete, can you go invest? They will never think about, hey, should I withdraw the fund? Because they know that they can't. Okay? And I can tell you, these type of investors will be the most profitable. They will see the highest return because they will leave the money there and not touch it and just let it run. Okay? And the cool thing is my service here with Philips allows me to invest beyond the Singapore companies and also into Bitcoin and ETF, which is the, what's that? ETF, Bitcoin, Ethereum ETF. Okay. So for those of you who are interested, all right, the link is over here. All right, investwithpete.co. Okay, so maybe I just type for you guys if you're interested to open an account, right, where I invest for you. Okay, I want to give you all some quick disclaimer here. So you go to the website, you can see my preview video, you can watch it just to understand exactly. But a very quick run through is we are mainly invested in accounts. Sorry, we are mainly invested in shares. Okay, guys, can you type shares? I know you all know that I'm an OMI guy. Everyone type in shares only. Shares only. Okay, so if you are doing options, there's no options here. Okay, only shares. Can everyone type in shares? Shares only. All right, so do take note. It is only shares. Only shares. All right. So just to share with you all why I choose shares, right, is because the portfolio size that everybody comes in, right? Firstly, everybody's size is different, right? Everybody's size is different. Imagine, I do a 30K portfolio and I go and like do a lot of options. Wow, the risk is way too high. Okay. So what I want to do is to have a stable portfolio, right? That is for more long-term returns. So if you want to do options, the best way is this. You attend our OMI lesson, you learn how to do it, you can do it yourself. But for a lot of people who say, hey, I don't want to invest and I don't want to do it myself, but I don't mind just shares, then this is where they can look at the next level portfolio. Okay. Now, just to share with you all some of the investment that we did previously. Okay. All right. So let me just pull out for you guys because you're asking about like some of the analyzed ROI, right? Okay. So I must caveat is that everybody's return is slightly different. Why do I say that? Because everybody's account is an individual account. Okay, it's an individual account. So let me just go here and let me share very quickly. Okay, so let me just show you. All right. Oh, where can see now? Oh, wait, what is this? Okay. Okay. So this is the one of the accounts, right? And this account is about 16%. Right? I can tell you the variance is maybe some of them are minus 20, then as high as like up 30. Okay, I explain to you all why. The reason is this, because for me, right, I invest in one fixed set of investment here. One fixed set. So depending on when they come in, right, okay, it will have different result as the market move. Right? As the market move. But like I said, am I worried about short-term fluctuation? The answer is no, right? Like what Andrew said, right? The summer portfolio can have a 30% drawdown now, but am I worried? The answer is no. Okay, the answer is no. Why? Because we are investing in strong companies and we are not affected by how the market is going to fluctuate. In fact, in January, I'm very heartened, right? A lot of the investors, right, when I told them, hey guys, the market is like collapsing. Okay, now is the best time for you to come in and do more. Right? So in terms of risk management, guys, let me ask you, if the market is low, what should you do? This is not just the portfolio. Ask yourself as an investor, if the market is dropping, what should you do? Should you worry that the price will drop until nothing? Or if you're buying good companies, you should ask yourself, wow, where can I get money from? Okay, yeah, right? You can dollar cost average or you can buy more, right? When there's fear in the market, be a bit more greedy, right? That's my word of advice to everyone. Okay, so so some of you are asking what are the annualized returns. So like I said, it varies. Some of them are, this one is 16%, some of them are as high as 30, some of them are down about 20. Okay, now what are the charges? The charges you can see on the website is 1.5% management fee and 15% performance fee, right? So when there's no performance, then there's no performance fee, right? But the management fee is just 1.5%. Okay, right? So why this is so powerful to couple together with SRS is this, right? So SRS, let's say for this account, they already make 15% already. Then if their investment is making another 16%, then your total return that year is 31% already. Okay, which is why for a lot of the the SRS investor, right? Wow, they are very keen to add funds on it. I have never seen before. It's like, wow, because they say, AP, I add funds, right? I haven't made money. I already make 15% already. Okay, so to them is do more. They want to do more. Okay, now the next one. This account slightly more different. It's also 16%, but this guy is a higher account size in terms of his own income. So he makes more from SRS than my portfolio. Okay, so a bit like okay, you can make more from SRS return, right? So really is to supercharge your portfolio in that sense. Okay, so for those of you who are keen, the website is here, investwithpete.co. Okay. The minimum sum. Okay, so why don't I just show you the website? Okay, maybe it's easier to explain. Hey guys, for those of you who are still here with me, all right, I'm just going to go through the next level portfolio. But right now, what I'm going to do is this. Let me know what questions you all have. All right. So for Andrew, right? So for Andrew, the thing is this. Think about whether you are looking at long-term or short-term. Hey, I also have my money inside, but look at me. Am I smiling or am I crying? Right? I'm looking at buying more. Okay, so I hope that you answer to my call earlier part of the year when I say it's time to add more funds. Okay, guys, as investors, you want to not think about the short-term fluctuation, but ask yourself, are you buying the best companies out there? Are you buying the strongest company? Now, can the strongest company have low performance? Sometimes based on the market, because the market is behaving weirdly? Absolutely, right? Then the question is this, you cannot control the market, but what can you control? Okay? I hope that is something that you all must take home with you also. You cannot control the market, but what can you control? You can control how you respond to the market. All right? Okay, so this is the website. I'm just going to go through very quickly over here. So for those of you who want to know more, right, you can go and look at, for example, what is it exactly, right? What is my focus? So this is the management fee over here. All right, between 0.75% to 0.15%. Okay, so for very, very high account guys, like more than $1 million, then it's 0.75. Okay, all right, but for majority is 1.5, so I just say 1.5. Okay, performance fee is 15% with a high watermark, right? You can watch the video for more details, and the smallest investment sum right now is $50,000. Okay, all right, so if you have keen, you can just go over here and you can drop me an email, then I can get you started. Okay, so let me know the questions. Let's see, Winston. You mentioned that we can transfer OA to SRS. Cannot. No, cannot. Winston, you cannot transfer OA to SRS. You cannot. Okay. So Saya is asking, once profit has been made, will there be a target to sell? Okay, I'm assuming you're referring to the next level portfolio. The answer is yes. For individual companies, every company, I have a target like, hey, what is the profit target that I want? Then once we hit that, we will actually not sell totally, but reduce the allocation a bit. Think about it. If you're buying a really strong company, how long do you want to hold the business? Okay, if you want to buy a strong company, how long should you hold it? Technically, you want to hold it as long as you can. So our idea is not to sell totally, but to say, hey, when we make some profit, let's sell a bit, but still keep a meaningful amount so that if the company continue to run, we can still continue to make profit from this. So it becomes like a golden goose kind of concept. Okay. Let's see. CPF also has SRS. No, DA. CPF and SRS are two different things. Two different things. CPF is CPF, SRS is SRS. They are two different things. Okay. SRS is not part of CPF. Let's see. Kelvin is asking, for retirees, should we top up our RA to 3 times? Wow, that one I have no idea, man. I have no idea. You know why? Because I do not depend on my CPF OA for retirement, to be very honest. Okay, so Kelvin, I'm so sorry. I do not have a good answer for that. I really do not have a good answer for that. Let's see. What other questions? Helen, you can only put 15,300 per year into SRS. How to have or put 50K as minimum? Okay. So great question. So if this is your first year, Helen, if this is your first year investing in SRS, then of course you will not meet the minimum, right? But the good thing is there are a lot of people with a lot of contribution to SRS already, but they have not properly and meaningfully utilized it. That's the key thing. Okay, and I think it's such a pity because the SRS return can be a lot more significant, right? If you just invest it, right? You're already getting a tax benefit, okay? And if you invest in it, you will get even more than that, even higher returns, right? So guys, if you're investing into, you're contributing to SRS, do invest it, okay? Do invest it. David, how to check how much SRS? Okay, so if you are putting into SRS, it must exist in your bank account. Okay, it must exist in your bank account. All right. So you must go and check your bank account. If your bank account has an SRS account, then that should be the amount of SRS you have. Okay, so David, I hope that helps you. Otherwise, it's like almost like you have to log into your account and let me see. Okay, no, I'm just kidding. Okay, Tia is asking, can you top up less than 15K? Yes, you can. You can top up $1 for SRS if you want. Okay, but it's just useless. Like just crappy. Okay. Helen, do I have to wait for 4 years to join the account? Okay, no, I would say, okay, let's put it that way. Okay, if you are investing through SRS and you have about 30K already, just drop me an email. I will check with my CIO, see what can we do about it. Okay, see what I can do about it. Liu Shihui is asking, can we invest with SRS on our own? Yes, you can. Yes, you can. Right. So if you go and like let's say you use a Philips account or a DBS account, you can actually open a brokerage account there and invest your SRS directly. But I can tell you the offerings is also a bit limited. I don't know why. Right. When I work with Philips, they allow me to invest way beyond. For example, in Singapore, if you just use your SRS, very likely you can only invest in Singapore shares, the ETFs, Singapore ETFs, or any unit trust that listed that is available for you to buy. Right. Otherwise, it would not be possible. So if you want to go beyond, right? I honestly don't know how else can be done. Right now, the only method I know personally is the investment service that I have with Philips. Okay, so do you want to check with, maybe you can check with Philips, see whether if you want to do it yourself, can you do it yourself? Yeah. Okay. Let's see, Eunice, the fund is also open to others who are not using SRS, i.e. cash. Yes, Eunice, that's right. Okay, so you can invest the next level portfolio with cash as well. Okay, but can I just say, if you have not top up your SRS and you want to use cash, then maybe think about, maybe do you want to put into SRS since you can get tax benefit? Okay. But of course, if you directly want to invest with me using cash, that is also possible. Okay, so maybe I just share the part, then you all can see. Okay, wow, I overrun already. Okay, I hope you. Okay, so those of you who need to go lah. Okay, I'll just finish up the Q&A first. Okay, let's see. Yeah. Okay, so okay, so can you all see the screen? If you can type in yes, help me type in yes. You can see the screen, type in yes. Okay, so what can you invest in? You can invest in SRS, or so when you go to how to apply, all right, there's account opening instructions. So step 1, right? So two main things. You need to submit 2 sets of one PDF form, right, to me, and also go to step 2 and go into the online application. Okay. Now, for those of you who are funding with SRS, then just remember there's an authorization for SRS at the last page. That's it. Okay. So you can download the form over here. So one account, one form. Now, if you're opening a joint account, I know some of you want to open joint account. If you want to open joint account, each of you must fill in 1 full form. Okay. I wish I can make this process less troublesome, but it's MES requirement. Okay. Now, after you have done this PDF form already, all right, you can send it email to me. Then the next thing is go to the online application. Okay, so if you click the link here, right, you can see that there's an application. I'll just go to as far as I can. Okay, so over here, right, look at the last two, either manage account or SRS. So if you're using cash, you can take the manage account. If you are going to fund with SRS, you can take SRS. Now, can you mix the two or not? The answer is no, cannot. Okay, cannot. You cannot mix cash and you cannot mix SRS together. So if you're going to invest in both, so I have investors who are like that, right? They invest their SRS with me and they are investing their cash with me. Both will be one account each. But for me, it's no difference. Why? Because I try to standardize all the accounts to invest in very similar stocks and similar percentage as well. Okay, so let's see how far I can go with this. Okay, let's say I click manage accounts. Yeah, so for those of you who are Singaporean, okay, I think I answered Suntak's question here also. Suktang. Okay, if you're Singaporean, then you can open with SingPass. Very simple, very fast. But if you are from Malaysia, from Hong Kong, from other countries, then you have to go through the manual method. Okay, for joint account, also go through the manual method here. Okay, say again, single applicant who are Singaporean, first one, SingPass. Joint account or overseas non-Singaporean, second one, fill in the manual form. So if let's say if you fill in the manual form, then it's just all this. Then just key and key. Then at the end, then you will attach the PDF here, submit it. Now, why do I ask you to send me the PDF first? Is because there are a lot of application going through my CIO's desk. Okay, so if you send me the PDF, then I can help you to expedite the process, right? That's the main thing. Okay, yeah, so Suntek asking what's the minimum is 50K. Okay, answer Johanri's question. I know this is high risk, but do you also invest in crypto via SRS? So Johanri or Johan, I do. Just to share with you all, right, the current portfolio allocation for Bitcoin ranges between 7 to 10%. Ethereum is about 3%. Okay, 7 to 10% is about 3%. Yeah. Okay, cool. Glenn is asking, can we leave your fund anytime you want? Yeah. So this is the thing. I technically do not impose a lock-in period. Okay, but after running this fund for just 1 year, right, I realized maybe I should. You know why? Because right, last year during the November drop period, right, there were a few people that were a bit flustered, and then they wanted to withdraw. So I spoke to them, and I think 2 of them withdraw out of the 200 of them. So thankfully, only 2 of them. And the thing is, it was so coincidental, right? They sent me the form to liquidate on that day, right? Was also one of the bottom. It was really one of the bottom days, right? The moment after they liquidated, the stock market recovered. So I don't know. I'm still toying with the idea. I'm still thinking about it. I'm also asking my mentor, like Sean, how should I do it? I'm very likely to impose a lock-in period. Why? Because I want all the investors that come with me, right, to really understand how I invest and not think short term. So if you're going to think short term, right, then don't join me. Really, right? It's for your own good, also for my own good, okay? Because I don't want you to be too flustered with market. So if you think you are a mature investor and you say, hey, sweet, I'm just investing this for the next 10, 20, 30 years one, right? I'm not going to be bothered about the 1 year fluctuation, right? Okay, then this portfolio is for you. But if you are like very short term, you very easily affected by the fluctuation one, right? Then the market drop, like move by 5%, you want to panic already, right? Then maybe this portfolio is not for you. Because why? This portfolio is not a income bond. It's not a securities. It's not like, treasury bonds like don't move, then give you dividend, like 1% a year. That's not what we want to do. Here, what we want to do is this. We want to achieve the high return, but also have the ability to tell ourselves there will be periods in the market where there will be drawdown. Okay, there will be periods in the market that will be drawdown. All right. The interesting thing is for Warren Buffett, right? In his existence of his 17 year, he managed to run a fund. And I can tell you, hey, Warren Buffett, is he one of the best or not? Is he one of the best? Can you type in the chat? Is Warren Buffett one of the best? I only found this out like last month only. I was very shocked myself. Okay. To me, he's one of the best. And his fund he only do it for 17 years. Then after that, right, he closed it. Okay. Now, is Warren Buffett the best? Guys, what do you think? Type in the chat. If you think it's the best, type in WB. His fund existed for 17 years, and I think he almost like 50x the money, if I'm not wrong. But when recently I go and look at all his annual returns, I realize when compared to the market, right? When compared to the market, more than 30% of the time, right? So for example, out of 17 years, right? I think there were more than 6 years, okay? 6 years where he underperformed the market severely. Really? I was damn shocked. I was like, 30% underperformed the market. But the key thing is this. When the portfolio outperformed, it really outperformed. That's why at the end of the day, the key thing is not to look at the one dip year. Imagine that one dip year, those investors with Warren Buffett left, right? Wow, they would have really killed themselves. Man. Okay? All right. So I'm not saying I'll be Warren Buffett. I'll be very honest. I don't think I'm a Warren Buffett. Okay. I want to be very humble here. I think there's only one Warren Buffett. Everybody tries to be him. Everybody wants to be him, including myself. Okay. But I've invested long enough to know that I think my method is very solid, right? I really believe in my method. There will be certain years where there are a bit of drawdowns, and I just hope that investors who join me, right, also have the long-term horizon. It's just like what we preach in OMI. Okay, we practice what we preach. That's the most important thing. Okay, WB versus PT. Don't versus versus I lose. Okay, all right. What's the minimum time horizon? I would say minimum time horizon. Okay, so guys, what do you all think is the minimum time horizon roughly gonna be for you guys? What's the minimum time horizon? If you're gonna invest in the market, so I want you to decide for yourself. Okay, for me, maybe you'll say first. Okay, so Andrew is saying, yeah, he's trying to manage the emotion part. Yes, exactly. Andrew, exactly. Right. Everybody is managing the emotion part, which is why right now I'm writing the investors letter to all my investors, is to tell them not just to report the performance, but also to share a lot about the investing mindset, how to control that, so that you don't get scared out of the market at the worst time possible. Really. That's the main thing. Okay. Yeah, so some of you all say 3 to 5 years, 5 years. So for me, I generally look at a minimum time horizon about 5 years. But I don't think I will put in a lock-in for 5 years. That's very excessive. That's a bit long. I think I put in 5 years and nobody will want to join. Okay, so I'm still thinking about it. I'll let all of you know. As of now, okay, so as of now, there is no lock-in period. So I just want to share very openly. I think who asked the question just now? Sorry, I took such a long way to answer your question. Sorry. Who was that? I think Glenn, right? What was the minimum hold period? I'm looking about now is no, but I'm thinking about maybe 3 years. Yeah, 3 years lock-in if I can. Yeah. Okay. Eunice asking what's the target annual return? Like I said, we don't have target annual return because we know that there are expected years that will drop, right? So I do not say that every year I want to hit 20%. Is that I want to be consistent with my methods, and I want to let the market carry me to the highest point possible. Then when it happens, then I'll liquidate. Okay, and that is the same for my personal portfolio, right? There are some years where I will lose 10%, but there are some years where I'll make like 40, 50, 100%. But if you only have a target, then guess what? Then you will try to always go for the 15%. Then that year, when you are down 10%, what will you do? You will start to do very dangerous things. Okay. So this one, I don't know whether you all get it. Having a every year target return, right, is actually a very dangerous thing to do as an investor, because that is not something you can really control because it's short term. Short term, very, very hard to control. Okay. All right. So the target is long term make money, but the target is also short term, don't care about the return a bit. Okay. All right. So that's all I want to share with you guys. For those of you who are interested, okay, sorry, I overrun the event quite a fair bit. So for those of you who wants to, can go to investwithpete.co, right? You can look out for the videos over here where I share exactly what is my strategy. I call it barbell strategy because I only invest in the extreme parts to make the portfolio very balanced. Okay, and also how the portfolio works. And if you want to know more in depth about the portfolio, which I don't have time to go through tonight, okay, then you can go to the website, right? Investwithpete.co. All right, okay. So thank you, everybody. I hope you all had a great session, understand how this whole thing works about CPF and also about SRS, right? I hope you all can make full use of it, right? And really, the most important thing to me is everybody just make money, right? At the end of the day, okay? All right, so thank you so much for coming. And that's all I have. See you guys really, really soon. Yeah, and any questions, just do let me know, all right? So that's all we have. All right, I'll see you guys next time. Bye-bye.